Very good afternoon, everyone. Hope your preparation and the revisions are going on in full swing. We're going to see one very important question from your reporting chapter in from Test Your Knowledge. So do listen and do make full use of it. Let's quickly get going and let's check out the question. While conducting audit of CGX Limited, a listed company for year 23-24, CA Srishti notices that company has extinguished following material liabilities unilaterally without entering into settlement with creditors and reported this amounts as gains and other income. The details are as under. First one is liabilities for purchase of raw materials were written back on account of poor quality of raw material and differences in rates. Amount involved is rupees 3.5 crores. Next is liabilities for capital goods were written back on account of defects in machinery supplied by creditors, that is 2 crores. The management is of the opinion that these dues are no longer payable. Therefore, retaining these liabilities on the financial statements would lead to overstatement of liabilities. Extinguishment of liabilities was made by the company in accordance with normal trade practices, and outstandings were written back after stopping dealing with such creditors. She want to send external confirmation requests, so that gives you an highlight of which relevant essay will be applicable in this context, that is essay 505. However, management informed her that sending such requests may be used by creditors as proof of existence of liability. She is contemplating inclusions of above matters under key audit matters. So one is SA 505, then SA 701. These are the two essays involved, and in audit report analyze the situation thereof in this case. So if you see, you should start your answer by giving reference to Ind AS 37, a liability, that is a liability definition. Liability is a present obligation of the entity to transfer economic resource as a result of past events, and the key things you should reproduce is they settle the obligation by negotiating a release from the obligation, or transfer the obligation to third party, or replace that obligation to transfer an economic resource with another obligation by entering into new transaction. Because the specific reason why I am emphasizing on this aspects is IC is expecting at least this key terms to be reproduced as it is. So in the above scenario, an entity has the obligation to transfer an economic resource until it is settled, transfer or replace that obligation. So in the given scenario, the company has written back, the company has not settled the obligation. So such an accounting treatment by management is questionable and against the conception. I repeat, such an accounting treatment by management is questionable and against the conceptual framework for financial reporting under Ind AS. Next is CA Srishti wanted to send external confirmation in accordance with. See how beautifully each aspect of the question is addressed, and also specific importance. For example, conceptual framework, first one. Next is SA 505. So like this, you should sequentially attack one by one in your answer and send external confirmation as per SA 505, but management informed that sending such requests is not allowed. In fact, she should display professional skepticism and be alert in this kind of scenarios, because there will be possibility of misstatements in the financial statements if retained by management from obtaining external confirmation. So the reasons that advanced by management do not appear to be valid and reasonable. So as per SA 505, so she should reassess the risk and perform alternative audit procedures so to mitigate such risk. And also she should consider the implications of the same in the above scenarios in her audit report as well. Lastly, addressing the say for 705 modifications to the opinion audit report. So the auditor shall modify only when the two scenarios, that is, auditor concludes that based on the audit evidence obtained, the financial statements as a whole are not free from material misstatement, or the auditor is unable to obtain official. So first is he has obtained it, second is unable to obtain it. Then SA 705 also states that misstatements arise when selecting accounting policies are not in accordance with applicable financial framework. So therefore, in this case, she needs to issue modified opinion. So keeping the above aspects, her contemplation of including the above under CAM, that is key audit matters, is not proper and is not in accordance with the SA 701, because the SA 701 specifically states that the auditor shall not communicate a matter in the CAM section when the auditor will be required to. When SA 705 applies, then 701 is not a substitute, because communicating key audit matters in the auditor's report is not a substitute for the auditor expressing a modified opinion when required by the circumstances of a specific audit engagement in accordance with SA 705. That is it. So let's quickly recall. First is you need to reproduce the liability definition as per Ind AS 37, then conceptual framework, giving importance to the term conceptual framework and SA 505, then SA 705. and then SA 701 is not applicable in this circumstances. So watch this video 3 to 4 times. You need not keep coming back to it again. Very good question, and also newly added because it was asked in one of the mocks in 2024. So keep these things in mind. All the very best. Keep your best wishes.